Good morning, everyone. Nostradamus, aka Nostradamus Trades. Let's get into it. Today, I did some more Tesla. That option premium is crazy. We got such an opportunity right now with the pandemic, the elections, the volatility going up, looking to capture some of that. Adds to that trip plan, that Tom reinvestment plan. You're going to want to check out my other Tesla video. We'll put that bad boy right there. You know what I'm saying? Goes into this a bit more. I'm doing some more options trades on. You're definitely going to want to check this out. Selling call credit spreads. I'm selling put credit spreads. I'm selling the Iron Condors. Let's get into the video. Here's a perfect time to take a little break and ask you to hit that subscribe button. It really helps out the channel. I really appreciate it so much. While you're down there, if you like this content, go ahead and hit that subscribe button and comment below. Tell me what you think. Do you want more options trades? Do you like what you're seeing? And let's get back into the video. I mean, check this out, everyone. Not many people on YouTube do this. I'm showing you everything. Here are my accounts, my profits, my losses, all my positions. Nothing special, no free, you don't have to pay for Patreon or what have you. All right, so I want to get into some trades that I've already done this morning, and I'll put another one on live for you because I really like this trade. Again, I'm doing a lot of stuff in Tesla. There's a lot of options premium here. Tesla is moving today. It's up $11. It's up $4.30. So I'm going to probably do a little bit more over in my IRA with this. I've just recently did a video. You'll want to check that out. Trading Tesla, Tesla on earnings, Tesla options, doing the trip plan. If you're not familiar with that, I invented it. Not really. I just gave it a name. So it's the Tom reinvestment plan. It's kind of like that drip plan, you know, that dividend reinvestment, except I'm using all this option premium, that theta decay. It's kind of like a passive income tool. So let's take a look at what I did already. So in that previous video, I discussed how I was selling Strangle. I sold a Strangle around 100 of my shares. And in that, I sold the 300 put. I received 1,700 credit. And then I also have the 550. I sold the 550 call. That one's a little bit more complicated, but because it involves a roll. But that one's currently setting at a $1,400 credit. This put has been amazing for me. I've already made $820 profit on that. Typically, I look to buy that back at half price. So because I sold it at $1,700, I would be already looking to close this out, buying it back at $850, making an $850 profit. But I actually have a GTC go to cancel order to buy that back at like 75%. I'm getting a little greedy. I don't know, man. I love me some Tesla, but I'm gonna go ahead and let that one run for a while. The biggest concern there would be if the stock market or Tesla does pull back deeply and Tesla ends up going below $300, I would be looking to buy another 100 shares at $300 because that's where my strike price is. You would take the 300 minus the 1,700 or $17 a share because it's, you know, you're paying $17 per share. So my cost basis, that particular 300 put doesn't start losing money until Tesla hits 283, if that makes any sense. If you have any questions about that, again, comment down below. All right, so let's get into the trade I did this morning. Like I said, I did a put credit spread and I did a call credit spread. You combine both of those, you know, the put credit spread's a bullish trade and the call credit spread is a bearish trade. And if you take a look at this, so I did this in November and you can see the current expected move is this brown line right here. You can go up here and this will show you, let's put some, so this right here, the current expected move for the November expiration is $112.85. These options expire on November 20. All right, so I want to get into some trades that I've already done this morning and I'll put another one on live for you because I really like this trade. Again, I'm doing a lot of stuff in Tesla. There's a lot of options premium here. Tesla is moving today. It's up $11. It's up $4.30. So I'm going to probably do a little bit more over in my IRA with this. I've just recently did a video. You'll want to check that out. Trading Tesla, Tesla on earnings, Tesla options, doing the trip plan. If you're not familiar with that, I invented it. Not really. I just gave it a name. So it's the Tom reinvestment plan. It's kind of like that DRIP plan, you know, that dividend reinvestment, except I'm using all this option premium, that theta decay. It's kind of like a passive income tool. So let's take a look at what I did already. So in that previous video, I discussed how I was selling Strangle. I sold a Strangle around 100 of my shares. And in that, I sold the 300 put. I received 1,700 credit. And then I also have the 550. I sold the 550 call. That one's a little bit more complicated, but because it involves a roll. But that one's currently setting at a $1,400 credit. This put has been amazing for me. I've already made $820 profit on that. Typically, I look to buy that back at half price. So because I sold it at $1,700, I would be already looking to close this out, buying it back at $850, making an $850 profit. But I actually have a GTC go to cancel order to buy that back at like 75%. I'm getting a little greedy. I don't know, man. I love me some Tesla, but I'm going to go ahead and let that one run for a while. The biggest concern there would be if the stock market or Tesla does pull back deeply and Tesla ends up going below $300, I would be looking to buy another 100 shares at $300 because that's where my strike price is. You would take the 300 minus the 1,700 or $17 a share because it's, you know, you're paying $17 per share. So my cost basis, that particular 300 put doesn't start losing money until Tesla hits 283, if that makes any sense. If you have any questions about that, again, comment down below. EIV is 94%. That's pretty high, but that's not crazy extreme for Tesla. It is pretty high. So then you come over here and you look at this brown line, and this is that whole $112 from where that's currently trading for 33, and Tesla just continues to go, as does my profit and loss. So currently it's looking like Tesla mathematically is expected to move anywhere between 550 and 316. So what I did is I sold the put credit spread. I sold the 365. And we can take a look. Oh, we already got some on. So let's clear that out. I sold the 365 and then I sold bought back the 355. That's $1,000 wide. So the max loss on that is $1,000. If Tesla goes below 355, max loss is $1,000 because it's $10 wide minus the credit received. Oh, excuse me. So on this, I received over here, you can see I received $3.70 credit. It's now already trading at $3.50. That's because Tesla's moving up. When we get to the call portion, you'll see I'm down in that. So then I sent that off. And then I also did the call credit spread over here. So this is the covered call that I already have. And then I sold the 590, 600, again, $10 wide. I received a $1.12 credit on that. Over here you can see. Now that's currently trading for $1.25. So I'm up 20 cents on the put portion. I'm down 10 cents. So 20 cents would be $20 and I'm down $10 over here. Now 10, 15 as it moves around. Really what that means is I received the combination of both of these, which would be $3.70 plus $1.12. So $4.82 credit. And because Tesla can only go one direction, my max theoretical loss is the $10 wide. I'm either going to lose it going with Tesla blowing past 600 or going down below 355, right? So my max theoretical loss is the $10 or $1,000 in option terms, minus the credit received, which is $4.83. So that means my max loss on this trade is defined risk at $5.17 or $517. There's a really good statistical chance, much greater than 50%, probably around 60, 65%, again, I typically look to only get 50% on this. So I've already put in go to cancel orders on these. The put right here, the put credit spread, buying it back right here at 185, which is half price of the 370, or same in the call credit spread, you know, buying it back at roughly 56 cents, about half price. 60 cents would be half price. As this moves around, I may adjust it. You know, I will post that on Twitter. Check that out. I do need to post these trades on Twitter. So that's the trade. That's the anatomy of the trade. And let's put some live stuff on similar to this over in my IRA. So again, I really do like that trade. I am over in my IRA, and this one has got a lot of stuff going on. I have about $1,400 cash. I need to start getting some. My theta is only 4, which means I don't have a lot of option stuff going on in over here. Because Tesla volatility is so high, let's try and capitalize on that. I don't really want to get called out on my shares, but the premium's so high, I've got to attempt to capture some cash. So I think it's highly unlikely that Tesla is going to go to 700 by the November expiration. So let's go ahead and sell a 700 call for around $7.80 or $780 profit. Let's see if we can get that fired off. What that means is, and let's take a look. So I got to switch that over to my IRA, shut that off. Probably won't fill because it was a bit above. So let's adjust this. Let's try and get 770. This is what you call price discovery, playing around with the bid and ask, trying to get someone to bite. Tesla's not extremely liquid when it comes to the options. 3-star liquidity. Let's see if we can get this at 765. Trying to squeeze every penny out of this bad boy. Nice. So I just got $765 credit. Sold the 700 call. I'm going to immediately come over here and put a close for 50% profit, which means it's going to buy it back at half price. Just going to run on its own, and if it ever hits that, it hits it. So we can take a look. Again, right there you can see the $765 credit received right here and right here. If you have any questions about that, comment below. What that means is what I'm really risking, that's a covered call, so I'm not risking much. It does lower my cost basis by $7.65 per share now. When I buy it back, it would be $3.85. But again, I'm lowering my cost basis. If Tesla is worth more than $700 at the November 20 expiration here, what that means is whoever bought the call has the right to call my shares away at $700. So if Tesla's $800 at November 20 expiration, my profits are capped. The difference between $431 currently dollars a share, $432 a share, and $700, which is $38,000 in profit in 51 days. Hey man, you know, I'm not going to cry over $38,000 plus the credit received of $765. Right, so we're looking at if my shares get called away, I'm looking at $39,000 profit off Tesla in the next 51 days. The chances of that happening again are really slim. Mathematically, there's a 6% chance of it even touching that, let alone continuing to stay in the money. I'll deal with that if that problem hits me. It is a high-class problem. I'm okay with that. And really all I did is I bought myself some downside protection. Now Tesla could go down another $7.65, and I've kind of just covered that. Again, I know there's a lot here, but there's a lot to do with the options. There's some great stuff. You know what? Let's go ahead. I really like that Iron Condor, that call and put thing, but I'm just going to do a put one over here for now. When I do these trades, I like to get 1/3 of the width of the strike. On my other one over there, it was more like half. When you add them both up, again, you know, it was $4.83 or 87-cent credit, something like that. $5 would be half the width of the strike, 1,000. So that's a chicken Iron Condor when you get half the width of the strike. Typically, again, you want to get about 1/3 of the width of the strike. Statistically, that gives you the best chance of being successful. I'm just going to do a put credit spread over here. Put credit spreads is a bullish trade. And I'm going to look to get 1/3 of the width of the strike. So let's see where that is. So I can go down to that 365, 355. 350 is a little bit more than 1/3 the width of the strike. 333 would be 1/3 the width of the strike, right? $333 credit received, $10 wide, 333 is 1/3. So this is right at that. This probably won't go through for 355. Let's try it. Order must have one leg. What just happened? I must have clicked something off. So we're selling the 365, we're buying back the 355, getting 355 credit, boom, boom, boom. Gonna probably have to lower this by 5 cents. All right, 350 credit, let's go. Boom, filled, just got another 350 credit. Again, I'm really bullish in Tesla. Though after being up $10, you know, anyway, so I'm going to come back over here. I'm going to hit this bad boy up, close for 50% profit, buy it back at 175. Hopefully that thing just fills. I come over here, boom, it just happens, you know. And here we go. That trip plan, man, there's some juicy stuff. Get some cash going in. If both those trades win, we're going to add a little more cash to this account. We just added some theta to this account. Theta's that decay, that option decay. Selling option premium is where it's at. I know it's scary, but that's the stuff you got to learn. It's not that hard. This is a defined risk trade I just did. Your max loss. My max loss on this is $10 wide again. It's $10 wide. So your max loss is $1,000 minus the credit received. I received... What just happened? Did I fill another one? Oh well, I guess I'm in it twice. Ooh. So my max loss would be $650, right? The $1,000 minus the credit received. You can do these with smaller plays real quick. Like we can come over and take a look. If you want to start off small, you know, you got to crawl before you ball. Some good ones over here. I'm a huge fan of Neo. Neo's doing great. Been doing a lot of, you know, I have that coverage triangle going over there. Come over to space. Let's take a look at this. We'll come over to space. I'm just going to directly go to the Iron Condor up here. I already have it hit. This is $2 wide. I am bullish. So $2 wide, 1/3 the width to strike would be like 77 cents or something, 76.66. This is a little bit more than that. It's going to get 90-cent credit. This is selling $2 wide, so I'm selling the 16.14 put, 26.28 call, getting 91-cent credit. Let's see if this goes off. That's probably not going to fill. We're probably going to have to adjust it, lower it by a few pennies. We'll try 89. Boom, boom, boom. Nope. Let's go down to 80. It's probably going to need 87, but we'll try 88. Boom, boom, boom. I bet the 87 fills. This is squeezing every penny of profit. That still didn't fill. Bummer. Oh, because the mid price went down a penny. Let's try 86. Boom, filled. Just got 86-cent credit. $2 wide, $2 minus 86. Max theoretical loss is $1.14 or $114. I'm going to immediately come over here, 14.16, and then the 26.28. We're going to hit 50%. We're going to buy that back for 43 cents. Hopefully that just fills on its own. Again, if you have any questions, comment down below. Tell me what you think of these trades. Tell me if you're an option trader, tell me what you're doing. I'm going to wrap this up. Love you all. Like, subscribe, hit that noti bell, and peace.